I will say that selling and buying a home at the same time can feel a little bit like a roller coaster of emotions, of excitement and stress. The emotional excitement of the new home, while dealing with the stress that comes from navigating a sale and a purchase at the same time, can be a bit overwhelming. So today's video will cover 3 options to choose from to help sellers decide what options they may have in selling their home and buying another. Here are the 3 basic options. Number 1, the sell and buy option, which is going to be the most common. Number 2 is the buy then sell while qualifying for 2 mortgages. And number 3 is the buy then sell equity option. Now, the spoiler alert, option 3, you won't need to qualify for 2 mortgages or 2 loans on this option. So you may want to stick around and hear how that one actually works.
Inconceivable!
Now, each option has its pros and cons, which will be covered, as well as to the best way to navigate each one. So let's start with option 1, which is to sell your house and buy a new house at the same time. This is the most common option to get your home on the market and get it under contract, contingent upon you purchasing a home of choice and concurrent close. The contingency of finding a home of choice and concurrent close just means that your buyer is going to have to wait to be able to close until whatever date you have negotiated on your future purchase. Most buyers will give you 10, 17 days in which to get your home under contract. And if the buyer really likes your home and they want it, they may give you some additional time to get that home under contract. Now, the new home purchase is going to be contingent upon the sale of your current home. The goal is really to work to get both of those to close consecutively or on the same day if possible. And you'll want some additional days of possession after the close of escrow, and usually 3 to 4 days if possible, to allow for the transition from your current house to the new house without having to go into temporary living. When using this strategy, it's best to make sure that the buyer's lender will be able to close on time, since really there isn't much room for error as far as time goes. I mean, when you have moving trucks lined up outside to move in and closing dates get backed up, can get ugly. Usually it's better to do a little longer escrow just to make sure everything closes on the scheduled time frame. Now, this strategy works well if there's an adequate supply of homes on the market. The downside actually to this is when the supply of homes is tight and more buyer competition. The contingency of selling a home could make your offer less attractive when competing with non-contingent offers that a seller can choose from. In this circumstance, the way to overcome that problem is to waive the home sale contingency of finding home of choice with your current buyer and replace it with a rent back clause that will allow you to continue living in your home for a month or 2 after the close of escrow. Now, if the buyer has owner-occupied financing, then they can actually, in theory, go up to 60-day rent back without jeopardizing their owner-occupied interest rate. If it's a cash or non-owner purchase, you can negotiate as long as rent back as needed that is agreeable to the buyer. Now, once the buyer of the home has removed all contingencies, your odds improve of getting your offer accepted on the future home. But your chances dramatically improve once your house closes and you can remove the contingency of selling your home and have access to all your cash. Obviously, this option does put you on a deadline schedule. I mean, if you want to avoid having to move twice. But if you know you're not going to need much time after the close, then this option may be the best one. Otherwise, if you still needed additional time to close after your rent back, then consider moving your stuff into storage and move into something temporary or move in with family to give you that additional time. The benefit of this option is generally it is the least expensive of the 3 options, since you won't have 2 mortgages to deal with. The drawback obviously is that you have a narrow window to find and close on a property without having to move twice. And there is, of course, the possibility of having to move into temporary housing if need be. So let's move on to option 2, buy and sell while qualifying for 2 mortgages. The second option really gives you more flexibility, and you only need to move once in this scenario. In this scenario, the seller gets qualified by the lender to purchase without having to sell their property. Now, there are 2 ways this actually can happen. Number 1, you can qualify with the intent to sell, which means the lender will qualify you based on the ability to cover 2 mortgages until you do sell. Or number 2, you can qualify to buy another with the intent of renting your property out. In this case, you will need a fully executed lease prior to signing documents for your new house. Now, the lender will likely have a rent study done by an appraiser to verify fair rent for your property as well. Now, assuming you can qualify for 2 homes with the intent to sell, there are 3 benefits. Number 1 is that you can take as much time as you need to find your next purchase and take as much time as you need to move into your future property. The second benefit is you can purchase the new home and remodel or make updates prior to even have to move in while you're still in your current house. The third benefit, if you're going to sell, you'll have the option of waiting till you're out of your current residence, cleaning it up, and you won't have to be involved in the showing process. The 2 drawbacks are you will have 2 mortgages and the cost of having 2 house payments at the same time. Second downside is you won't be able to access your equity from your home to put a larger down payment on the next home. Again, the larger the down payment, the more attractive your offer will even look to a seller if you are, again, competing with other buyers on the same property. And ideally, you'd like to have at least 20% down to eliminate mortgage insurance payment. Now, if you want to minimize the cost of carrying 2 mortgages, then my bonus tip is this. You should start to actually get your house ready to sell as soon as you start looking for homes. In fact, I would highly recommend you watch my video on preparing your home for sale in 30 days so you can get a leg up on how to prepare now. And if you adopt this strategy, you will be able to put your home on the market shortly after your future property is even under contract. Now, my pro tip with this strategy is the ability to do what we call a recast on the loan. And in this scenario, you're closing on your future home first, then closing on your original home second. Recasting is the term used to make a 1 lump sum payment, which in turn lowers your monthly house payment and keeps your current interest rate. The lump sum in this case comes from the sale of your original house, which closes again after your new purchase. And you'll want to contact your lender that is actually providing the financing on your purchase and verify that they will recast your loan if you make a lump sum payment towards obviously the principal. Now, option number 3, the buy before you sell equity option. This option allows you to unlock your current equity in your current home as an interest-free down payment to go towards the purchase of your next home. This option doesn't require you to have to qualify for 2 mortgages at the same time or need for the home sale contingency when we write the offer. And so this option may be a consideration if you have at least 30% equity in your current home. There are some requirements on the property eligibility as well, such as principal residence, up to $2.5 million on less than 2 acres, and no VA or FHA financing on the incoming residents, just to name a few. So this program has the ability to make a seller the ability to be even a cash buyer if needed in order to stand out in a field of offers. The benefit of this program is that it allows you to buy a property first without the concern of qualifying again for 2 mortgages. I'd say the biggest advantage of this option really is that it allows you to find the perfect home without the constraints of time and, again, not having 2 loans or the contingency of selling your home. Now, this strategy can be extremely helpful if you are looking to find a one-of-a-kind type property or when inventory levels are tight. And buyer competition is strong. In either case, a contingency of selling a home could likely be the reason your offer doesn't get accepted. The drawback is that it will cost a little bit more than option one, but it does eliminate the possibility of an interim move. There you are, the three options. Which way actually makes most sense for you? Leave a comment down below, and if you want to discuss your situation or your options further, feel free to reach out. My contact information is in the description below. As always, if you like this content, then hit the like button as well as the subscribe and bell icon to be notified of new real estate content for the Ventura area.